Now, you should be able to see a chart on the screen, the title that says when larger traders are not in the market. If you have a look at, this is actually a new tool or new feature that is part of the NinjaTrader 8's order flow suite of tools. You do need a license version of NinjaTrader to access this, but it's well worth it, and you'll see from some of the other things I'll show you as to why. So in this chart that we can see here, these pink lines that I drew in, they just represent a time which for me Melbourne-based, 11 a.m. was when there was some significant data out of China coming out. So the point of highlighting this is notice that the markets were already open for a significant amount of time prior to that, but big orders only came into the market post that data. So this is just one example, and you'll see this very, very frequently, where a lot of larger traders stay out of the markets until significant data events have passed. So how is this helpful? Well, if larger traders don't commit to trading until, after waiting for data events to pass, what do you think is likely to occur at those areas of interest that were established prior to that time? And what could be those areas of interest? So let's have a look at that. Right, so I'm sure most of you are familiar with volume profile. Now, if let's have a look at, let's get one of these drawing tools up. Right, so you should be able to see a red dot on the screen. So where I'm highlighting this red dot, so this is just after 11 a.m. as you can see on the time on the chart. Now this big area in the volume profile, which shows where most of the trading up until this time has been conducted, the majority of that was actually established prior to that data coming out. Now we know that a lot of traders understand that acceptance, agreed prices, and what the volume profile means, those types of things. So you would also appreciate that you've got traders coming into the market who are likely to get short around this area. And you can see all of these areas where traders have actually worked, where we can see some two-sided trading and evidence therefore that we've actually got short sellers coming in. So the point of highlighting this is we've got traders responding to an area that was established by traders who don't necessarily dictate the overall movement of the market. Secondly, I'm sure many of you are familiar with opening range indicators, those types of things, thinking about the first 30 minutes of trade. This goes back to some classic texts in technical analysis. But what if we looked at the opening range based on the trading that occurs prior to a significant data event? All right, so all I've done here is plotted this blue shaded area is the area prior, so all of the trading range from the highs to the lows prior to that significant data coming out. So these lows and these highs were established by less significant traders. So these are areas of interest when you come into the market, and you can see immediately here that traders who were looking at getting on a break from these lows got washed out.